In the ideal world, what would you like to see the Fed do that would be most beneficial to Vanguard clients?
I think in general, I think they want to keep with a consistent tone of their messaging that they're data dependent and that they're going to continue to focus on the labor market and signs of inflation in the marketplace. And they're not in a rush in terms of raising rates, and that would be a very positive message for the overall marketplace.
How concerned are your clients in terms of their own fixed income portfolios and where to go next? There's been a lot of talk that essentially a bull market in bonds is going to be ending eventually. So how concerned are they, and what sort of advice are you offering?
Well, it's like it goes back to why are you investing in bonds? There's a number of reasons. One would be for income, which has diminished greatly over the last several years, but you still generate an income from the coupon on the bond payments. The other piece is for diversification and stability. And those themes really haven't changed. So, at the end of the day, they provide still a very valuable source of diversification in an equity portfolio. And they also provide a lot of stability overall in terms of investment grade bonds have a very low default rate. So you're pretty much, you're certain that you're going to get your money back at maturity, given that defaults are expected to be very low in the investment grade space for the foreseeable future.
Is the average client mix of fixed income changing? You mentioned investment grade bonds. Are you seeing a move into some other fixed income asset classes away from treasuries? Is that still continuing?
Yeah, you tend to see in this type of cycle when you have lower levels of rates, you see investors going out the yield curve, so they're taking on more duration or interest rate risk. You also see investors that are migrating away from money markets into short-dated corporate bond funds where you're picking up incremental yield. But the key thing that investors have to remember is why are you investing? And you want to make sure that you're investing in the right type of product given your time horizon. And the other thing to keep in mind is that, rising rates, a lot of that's already priced into the market. So the question becomes, are rates going to rise faster than what the market is already anticipating? And that's what is always much more difficult to forecast.